take a look at what the Wall Street did then. And it does look like the Dow was a real underperformer. When you take a look at the S&P 500 and NASDAQ, even in the mixed session, they did hold on to some resilience.
Absolutely. Shansi, it's actually a mixed session what we're seeing on Wall Street. The kind of moves that we've seen. If you talk about, since you spoke about Dow, now Dow, that one dipped another 0.25%, nearly 111 points. And this is that Dow is failing for an 8th straight day. And this is for the first time since June 2018. But at the same time, NASDAQ and S&P, they both are inching at the record highs. NASDAQ gained more than 1%, nearly 1.2%, and again hit a fresh record high. S&P also edged up nearly 0.4%. Significantly, stocks from Meta, Apple, Alphabet, Tesla, AI chip maker like Broadcom, they have been rallying to fresh all-time highs now. In fact, Broadcom, which topped a $1 trillion market value for the first time. This is what is taking NASDAQ to higher levels. In fact, a total of 11% of gain what you've seen in NASDAQ in the last couple of days. So the tech as well as the consumer discretionary sectors, they are making new highs there. So it's a mixed kind of session what we've been seeing, the mixed kind of move from last few days what we've been seeing in US market. Remember, Fed is set to begin a 2-day policy meeting today, and investors will be keenly watching out for the forward commentary. As widely expected, they are going to make a rate cut, but the commentary is very important. Talking about the 10-year bond yield, they were a little unchanged at 4.39%. But what about oil, Shansi?
Well, absolutely. And before shifting focus to oil, I just wanted to quickly mark the fact that, it's very interesting because the gains for the S&P 500 and NASDAQ largely came without the cooperation of the market bellwether Nvidia. Now, that's something that we've not seen happen. We'll be getting you more updates on that a little later also. But oil futures, let's take a look at what they really did, because they slipped from the highest levels in several weeks on weakness in consumer spending in China, the world's largest oil importer. And even as investors also paused buying ahead of the US Federal Reserve's interest rate decision. Now, that's the one that we've been telling you about, we've been talking about, and that's also the one that the market is watching out for, at least when it comes to oil prices. When you take a look at Brent crude, a little bit in a wait and watch mode is where Brent as well as WTI were. But when you take a look at Brent crude, settled around that $73 a barrel mark, downtick of just about 58 cents coming in. For Brent crude as well, 0.8% lower is where that one was at. When you take a look at US WTI as well, mirroring the kind of moves that we've seen for Brent. And when you take a look at the downtick, then 0.8% downtick even for US WTI, $70 a barrel is the kind of level that you're looking at, also shedding 58 cents. So quite the mirror in terms of what Brent really did. And when you take a look at US WTI as well, this entire session was after it registered its highest close since November 7. So you've seen some strength coming in oil prices, and now you've seen a little bit of a wait and watch mode, a little bit of weakness, a tepid move coming in as far as oil prices are concerned. But last week, of course, you did have oil benefiting from the expectation that supply would tighten with additional sanctions on crude producers, Russia and Iran, while you did also have possible lower interest rates in the US and Europe that will be spurring a little bit of demand. Now, in terms of the kind of expectations that we have, just like Priyanka mentioned, 0.25 percentage point cut is what we're penciling in when it comes to the Fed. And you do have lower interest rates that can also stimulate economic growth and increase oil demand. And on the back of that, you do have the market waiting by to see what really happens with the Fed.
If you like this video, then like, share and subscribe to ET Now.